If banks don't act now, they're going to go broke. So says a recent study from McKinsey, the global sprawling consulting agency. Hello and welcome to today's Daily Blitz. In today's video, we'll be discussing this recent report from McKinsey and what it really means. So effectively, a consultant at McKinsey has said 60% of banks worldwide produce returns below their cost of capital, and a third of them are so in error of this that they won't survive an economic downturn. Now, what exactly, Nikolai, does this mean? What is it telling you about the global banking system?
What most people don't realize is that banks borrow money before they lend it out, and that borrowing costs them something. And of course, their profit margin then is the difference in cost and the level of profit. And the McKinsey study is pointing out that this gap, basically the profit margin of running a bank, is getting narrower and narrower and narrower. And for some banks, it's actually crossed over. So the basic bread and butter business of a bank is no longer profitable.
This is affecting all banks worldwide. Where do you think this is really coming from?
I think it's largely to do with monetary policy and with inflation rates. So we've got lower inflation, lower interest rates, and all of this squeezes bank profitability lower and lower and lower and lower.
Now, in terms of the amount of money that banks globally have allocated to sort of dealing with this problem is also quite low, something that was also highlighted by this report, where banks are allocating just 35% of their IT budgets to innovation, while fintech companies, the smaller new startups, spend more than 70% on this. Now, in terms of, is this telling us that banks just aren't changing with the times when bread and butter business is being threatened?
That's right. Not just the basic business model of banking is under threat because of profitability, but alternatives are emerging. This fintech sector is emerging and putting banks' entire existence under threat.
So when McKinsey was saying banks really need to act now, is it ultimately just calling on banks to innovate now?
It's likely that they're also going to have to acquire these innovative new businesses, or another big focus of the study was for the big banks to merge in order to try and keep their costs under control.
So even larger consolidation of the banking sector as a whole. Now, I guess all of this is really going to happen in the City of London, here in London actually, for that matter, all the square mile. Because while the City of London has more banks in it than it does people, really, it's also a home of fintech in general. So just this year, there have been 114 fintech deals that were closed in the City of London, and that was I think it was over 1.6 billion pounds worth in investment money is poured into fintech in the sector, and that's actually put the City of London ahead of New York and ahead of San Francisco. So is this another sort of despite Brexit bullish for Britain headline?
Probably, but really, I think the lesson here is that the investment potential of fintech for British investors is incredibly high. It's a great opportunity, and it's something that we should be looking at and you should be looking at as well.
So though we have reasons to fear with 60% of the banks worldwide under threat, it's also a reason to be bullish as well, right?
That's right.
Perfect. Well, that sums up today's Daily Blitz. Thank you very much for watching, and be sure to tune in tomorrow.